Okay, good day, guys. I hope everyone is doing well. Now let's calculate the production units method of depreciation. So basically, this method, as I've explained earlier on, that this method is common in lease agreements for a manufacturer. That's why even the statement says ABC manufactures buys a machine. So this statement is common in manufacturers, right? Okay, now let's dive into the topic, or actually let's dive into the method, and let me show you how easily it can be calculated, right? So we buy a machine for 10,000, right? Excluding VAT. So there's no need for us to account or to not account for VAT because of it is excluding. Okay. So, and there's no statement saying that the company will not repay back, will not claim the VAT. Okay, so this is basically our cost. 100,000 is our cost, right? And then we expect to produce 10,000 units. So 10,000 units would be like basically would be the useful life, right, of this machine. Okay, so it has a residual value of 10,000. So our depreciable amount would be 100,000 minus 10,000. So minus 10,000. Sorry for the typo. Let me do it again. Minus 10,000. So therefore it gives you an amount of 90,000, which is a depreciable amount, right? So therefore you take your 90,000, right? Then after you get your 90,000, you multiply with the total useful units that can be produced from this machine, right? And then obviously, let's say in year one, they say 2,200 units were manufactured. So this will be the amount that will give you the depreciation for year one. So basically, you can all take out our calculators and calculate this amount. So 2,200 divided by 10,000. So it gives you multiply by 90,000. So it will give you an amount of 19,800. So therefore, this is year one. So for year two, we still take the same cost. We don't take the book value or the carrying amount. We multiply by the units produced in year two, which is 3,100 divided by 10,000, right? Then this amount will be the depreciation for year two. So let's all take out our calculators and do it. So 90,000 times 3.1 divided by 10,000. So basically will give you an amount of 27,900, right? So therefore we have to now do our journals. So it is not tricky. We just have to absorb all the information, right? Okay, so depreciation for year one, obviously we're gonna debit our depreciation and credit our accumulated depreciation, right? So it is gonna be 19,800, right? We're gonna debit 19,800, right? And then for year two, we're gonna debit 27,900. So for year two, right, we're gonna debit 27,900, uh, and then we're gonna credit accumulated depreciation of the 27,900. Remember, these two amounts must always be identical. Why? Because accounting, whatever you do on the left, you do on the right, basically. So this brings us to the end of calculating the production unit method. Now let's move on to the next part, where we'll be dealing with a more practical example of how you can integrate all of this stuff that we have all learned.